Hello, guys, and welcome to another episode with CryptoLord. I will be taking you on futures trading today based on popular demand. People have been asking me, "Oh, CryptoLord, when are you going to do something about futures trading? We want to earn from it. We see your page, you make calls. We don't know how to get into the trade." So today, this episode is for you all who wants to get into futures trading. So some of you guys will ask, what is future trading? What is futures trading? Why is it not the same thing with buying Bitcoin or buying Ethereum or holding? Oh, no. It's not the same thing. You see, um, in futures, you are not buying the assets to hold. You are buying the speculative price. You are like buying the price. You are buying like, oh, this asset is going up or is going down. You don't own the asset in itself. So since futures trading is all about buying speculative assets. Now there will be two sides of this. Either you are buying the long or you are buying the short. So how is this thing working? So let's say this is a contract. If you are buying a long, that means there's somebody buying a short. That is to say, you are predicting that the price is going up, and another person is saying the price is go down. If at the end of the day or the time frame, the price goes up, you win. The other person loses. That is, it gets liquidated. If at the end of the price of Bitcoin drops, you win, you lose, while the person wins. So in futures trading, somebody will win and somebody will lose. It must be a contract between two parties, fostered by a broker or by a brokerage firm that helps arrange this contract between these two parties, one going for the one side and the other going for the opposite side. So we'll be talking more in our next episode about how you can actually predict this price movement, which people actually tag as FA and TA. That is fundamental analysis and technical analysis. But for today's episode, we basically just for people who wants to get involved in futures trading and how they can actually start trading on Bybit and how they can set up their accounts. So guys, let's go to the practical aspect of this whole video, how you can actually set up your Bybit futures trading and how you can actually trade on any assets in the derivative markets. First of all, if you don't have an account with Bybit, just check the link below for my referral link. Sign up on Bybit and deposit some crypto from either your wallet or from any exchange at all. Bybit is one of the biggest crypto exchange in the world. They have over 10 million users, so your funds are very safe. Also, there are several bonuses for first timer. When you deposit and trade to a certain volume, $60, you get $5 bonus. So I think that is a good deal. Now let's go to straight to the points we are discussing today. So first of all, I will go to bybit.com. Bybit.com. Then I will log in. Oh, I think I'm already logged in with my system. So I'm already logged in with my system. So guys, the first thing first is to actually transfer these funds you have deposited from your spot wallet to your derivative wallet. So how are we going to do that? So we are going to come to assets, then you are going to see spots. Now when you open this spot, you can be able to transfer anything from spot to derivatives or from spot to funding if you want to make use of P2P. But for this for this main purpose, we are using derivative. We're talking about derivative. So you can be able to transfer your funds from spot to derivative. You can transfer any of these spots, but for this main purpose, we are using USDT. So now I have no USDT in my spot balance. All my USDT is in my USDT perpetual balance. So if you are sending in Ethereum or any other cryptocurrency that is not USDT, the first thing you have to do is to try to sell it to get USDT. Sell it in the spot market to get USDT. Then this your USDT, you can transfer it from spot to derivative. So now you can select any amount of money you want to do and just confirm, and it will just go. There is no fee charging for whatsoever you are doing with this transfer. So the next thing you are doing is to go to derivatives. Derivative is same thing as futures. So from derivatives, we can go to the to USDT perpetual, which is of our concern. USDT perpetual. There are several stable coins perpetual contracts you can actually trade on, but mostly the most common one is the USDT perpetual. Then you can see the interface. Even when you're using your mobile phone, it's almost exactly like this. So now this is Bitcoin perpetual contract. This is it here. So now what are we looking at this place now? So now we'll be talking about the futures that will help you understand how to do how to trade futures very, very, very well. So now we go here. Here is cross and isolated. They have two margins mode, the cross and the isolated margin. So for the cross margins, when you're on the cross margin, it means that this contract is making use of all the liquidity in your derivative accounts, including the one you are not in trade with. Everything in your derivative account. So that is to show that if you are in a trade, let's say you transfer $50 into your derivative account from your spot wallet, then you enter a trade with $5. Now what cross does is this: it makes use of the whole $50, that this thing will extend your liquidation points. It will extend your liquidation points, and that is just what it does. It extends your liquidation point. So you can actually lose the whole $50 if all your liquidation point gets exhausted. Now let's assume that you are in a trade with $10 or $5. You buy a Bitcoin long. You long Bitcoin with $10, and your liquidation on cross is you bought at 19. Now your liquidation on cross is around let's say we're talking about the leverage. Let's say your liquidation on cross is 15 17. Let's just take an example, $17,000. It won't be the same liquidation if you are using isolated. Now we'll come to talk about isolated. Now on getting to $17, you are losing both the $5 and the $45 remaining balance in your wallet. You are losing everything totally. So now for isolated margins, what are you doing? Now isolated margins, you are saying specifically this is the amount of funds I want to put into this contract. When I'm buying long with $5, this is the $5 I want to use. If I'm buying short or long with $10, this is what I want to use. So this now, when you get liquidated, you are getting liquidated with the amount you actually use in buying these contracts. There's nothing happening with other your balance in the derivative. There's nothing happening with it. You just get liquidated on these. Now the disadvantage of this is this: when you are using this, your liquidation will be lesser compared to your cross, because your cross is using a very big margin call. Now your isolated is using that particular small part of it, that fraction which you use in entering this trade. So it's very very important that you understand the difference between these two, the cross and the isolated. Now let's go to leverage. What are leverage? Okay, what are leverage? Okay, now leverage will tell you how your profit or how your loss will actually spread to. Now you can see that from here, from 1x to 100x, that is to show you that this leverage makes use of percentage. It shows that for every percentage increase, it should be multiplied by 1x if it's on 1x. So for every percentage increase, if you put it to 5x, for every percentage increase in Bitcoin price, if you are longing, it should be multiplied by 5s. So if you're using 5s leverage and Bitcoin goes to 1%, that is 5 times 1, that is 5%. So you are getting 5% on your 5% profit on your call if it goes your own way. So now on the leverage, like I said earlier on, the leverage you are using will determine your profit or your loss or liquidation. So now in futures, you get liquidated because you are buying speculative, you are buying price, you are buying speculative prices of a particular asset. So liquidation means a point whereby your margin will no longer carry this contract. You have lost your money out of the trade. So the bigger margin, the bigger leverage you are actually using, um, the bigger your profit, and the bigger your loss by percentage decrease or by percentage increase. So your leverage will determine how, what kind of profit or what kind of loss do you want to get. You discover that at 10% now, so 1% increase in, let's say, Bitcoin is 10% of your profit. So 10% increase in Bitcoin is 10 times 10, that is 100% of your profit, of your margin. Now your profit on the margin. So now let's go to the negative aspect of it too. So 1% decrease in Bitcoin is 10% reduction of your margin. That is 10% loss of your margin. So for you to get liquidated is when Bitcoin decrease by 10%, you have already lost all your money, because 10 times 10, that is 100%. You have lost 100% of your margin. So when you are using leverage size of 10, for you to make 100% profit, Bitcoin needs to move 10%. The price of Bitcoin needs to move 10%. Now, for you to make 100% loss, that is liquidation, for you to get liquidated, now your Bitcoin needs to go drop down by 10%. So when Bitcoin drops down to 10%, you have lost your money. So, and also remember, you are, anything you buy, yeah, doesn't mean you own the asset. It doesn't mean you own the Bitcoin. You don't own the Bitcoin. You don't own the Bitcoin. You are only trading a speculative price of Bitcoin. There are several um there are several um tokens listed on Bybit that you can actually trade the derivative. There are many of them. You can actually trade derivative of them. So you have a long choice for you to choose. So next episode, we'll be talking more about analyzing what are the ideas to know how to get into the price, how to make profit from it. We'll be talking about FA, fundamental analysis, and technical analysis. There are some skills you have to acquire. There are some skills you have to know for you to be able to know, okay, where is the price going now? Where will the price be before? So those skills requires you to use historical data to actually predict where the price will be, let's say in the next 15 minutes, in the next 30 minutes, in the next 1 hour, depending, in the next day, in the next month, depending on what you're actually looking for. So now let's get to this place now. So limit. What is limit? Now when you are on limit order, it tell you that you want to put your price. You want to buy at so price, you can buy at any price. Then when you are in market means you are buying at the current market price. The thing we just pick at the current market price. So the quantity you want to order, these are the percentage. You can use 10% of your portfolio, 25%, 50%, 75, 100, or you can also choose your own percent. You can actually just choose maybe less than what you want to buy, maybe 5% of your portfolio. Oh, so I normally use cross. I normally use cross margins. I normally use cross margins. So I know how to actually reduce my I know what order I want to actually place. It's very, very good that you actually know about this thing and get yourself conversant with it very, 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 very well. It's very, very important. Um so if you believe that Bitcoin price is going up, you just buy your long. And if you believe it's going down, you short. So everything is just for you to actually make good use of it. You can actually close your trade anytime you want. You can actually close it anytime you want. You can close it, just close, like now you can close it on the limit order. Oh, I want to sell at this price. Or you can just close it on the market order. Just click on the and you can close. You can close, like let's say 5%, 10% profit, 15, depend on whatever choice you actually wants to make. Okay, so I think this is all for now. Next episode we'll be talking more about we'll still be talking more about futures and other ways you can actually improve your game. I will be talking more about copy trading in our next episode. How you can actually copy trade an expert if you don't know how to actually read the charts, if you don't know how to predict the market's direction, where the market is going or where the price is going to be. There are some people who are experts in it and you can actually rely on them for you to be able to trade. So it's very, very important that you know this simple basic thing: how to put your order, how to price, how to use the limit order to put where you want to buy from, and how to switch, how to actually buy from any project you actually want to buy. Thank you, everybody. Hope to see you in our next episode. I hope you enjoyed this episode. Like, subscribe, and have a wonderful day.